Hi, let's discuss TILA. Consumer Credit Protection Act, Truth in Lending Act. The Truth in Lending Act, TILA, Title I of the Consumer Credit Protection Act, promotes the informed use of consumer credit by requiring disclosures about its terms and costs. Implemented by the Federal Reserve Regulation Z. The Truth in Lending Act pairs with the Federal Reserve Regulation Z for actual implementation of the Act's provisions. It does not regulate loan charges. Instead, it requires a uniform standard disclosure of loan costs and charges so that the consumer can fairly shop loans by comparing one to the other. TILA, disclosure of full credit cost. TILA requires disclosure of loan terms in 4 formats: finance charge, total amount financed, total amount of payments, and annual percentage rate known as APR. And the disclosure of the percentage rate must be within 1/8 of a percent. Included in the finance charges, lenders must disclose interest, discount points, servicing fees, and origination fees. But they are not forced to disclose things like title, legal, survey, appraisal, credit report, or deed preparations. By insisting that the actual full cost of the credit be disclosed as an annual percentage rate, consumers are provided with a mechanism to accurately compare loans. Quoted APR includes the interest rate, origination fees, discount points, and other loan costs. APR represents the annual cost of credit. Advertising. TILA regulates advertising. Basically, if a bit of information about a loan is advertised, all of the information must be provided. The purpose is to prevent a consumer from being misled by being given only partial information. Therefore, if an advertisement for a mortgage contains any of the following trigger terms, then 3 specific disclosures must also be included in the advertisement. The triggering terms are: 1, 1. The amount of the down payment expressed either as a percentage or as a dollar amount. 2. The amount of any payment expressed either as a percentage or as a dollar amount. 3. The period of repayment, which means the total time required to repay the loan. 'When the above triggering terms are included in an advertisement, then the following must also be advertised. 1. The amount and percentage of the down payment. 2. The terms of repayment. 3. The annual percentage rate. Using the terms spelled out in full. If the annual percentage rate may be increased after consummation of credit transaction, that fact must also be disclosed. Examples of triggering terms. Advertisements with the phrasing 25% down, 90% financing, monthly payments less than $500, only 36 small payments required, 4-year loans available, 4% interest rate. Not triggering terms. The following are not considered as triggering terms. The phrase, no down payment required. Or vague phrases that simply talk up the loan terms such as easy monthly payments. Would be the phrase, pay weekly. Or terms to fit your budget. Or 5% below the standard rate. So what does this mean for a real estate licensee? If along with advertising the real estate property as being for sale, a real estate licensee mentions triggering terms, the licensee is subject to the rule. Sample advertising. Quote, only $850 a month for this beautiful home. Because the statement is a triggering term, the amount of required down payment, how long the term is, and the APR must also be clearly disclosed in the advertisement. Sample advertising. Quote, easy payments available on this lovely home, end quote. To include this statement, no other loan details would have to be provided. This is considered too vague to be a triggering term. Right of rescission. Under TILA, borrowers must also be notified that they have a 3-day right of rescission. Lenders are required to deliver 2 copies of the notice of the right to rescind and 1 copy of the disclosure statement to each consumer entitled to rescind. The notice must be on a separate document that identifies the rescission period on the transaction and must clearly and conspicuously disclose the retention or acquisition of a security interest in the consumer's principal dwelling. The consumer's right to rescind the transaction and how the consumer may exercise the right to rescind with the form for that purpose, designating the address of the lender's place of business. The right of rescission does not apply to home mortgages except as refinances or home equity loans.